Well, we're back with you to take a look at our opening trades here this morning, now that the market is underway for a few minutes. And we have a little extra expert help right in the studio here. We have none other than Chris Swift with us. He is with Swift Trading Incorporated in Nashville. How you doing?
Doing great, Marlin. How are you this morning?
Doing fine. Thanks
Good.
for joining us this morning as we kick off our trade. We want to focus on the grain side here first.
Sure.
Softer tone overnight. Let's go look at the market prices here. And as we take a look at our corn board, here we go with a look at the May contract. The reason I'm skipping over March, by the way, is it goes into delivery day after tomorrow, so not much volume in March at all. But we have the May down 1.5 pennies now at 3.89, and we have July down a half at 3.97 per bushel. And December now down a half at 4.06 3/4. So that's about 2 ticks off of our low of the day. If you look at July, same thing there, a couple of ticks off the low of the day. The ranges are only about 3 cents wide from the high to the low from the overnight and this morning here, Chris. Is this still basically long liquidation that we're looking at since the USDA report came out Thursday?
I think so. That report shows some really good factors with stocks to usage ratio increasing in corn quite a bit. I think it was close to 14% increase in stocks to usage. So that's a good thing. It's keeping corn moving. And even though we haven't had anything really bullish, there's been nothing negative to begin to push the market lower right now.
Let's take a look at soybeans and see how they're trading there. So as we go to the soybean board, we now have the May contract there actually turning a little higher now. Now, we were lower last night. We're now at 10.41 even per bushel. That's up 1 3/4. We had gotten as low as 10.32 overnight. So we've come off of that now by 9 cents. This is interesting. Now we have the July contract 2 1/4 lower still at 10.46. That's only 1 tick from its low of the day. That's quite a dichotomy there between those two there, Chris, between May and July. And we have August down a couple, September up a half. So a real mixed affair going on in the soybeans. I'm hearing mixed fundamentals, too. It sounds like a chance of rain in Argentina, maybe 10 days out, but maybe lighter than they expected Friday. What's up with that?
Yeah, and in Argentina, I don't think that the rain's going to help too awful much. We were listening to some broadcasts this morning and doesn't seem to think that even when that rain comes, it's a little beyond timely right now. So it may help some of the later planted beans, but as far as the majority of the crop, it won't be of great benefit right now, it doesn't look like.
Okay, that was kind of the point we were discussing earlier in the broadcast here about if it's so late in the growing season, might add a little, test weight maybe. But
maybe, if anything, just make everything kind of nasty for the first part of harvest more than anything.
I think the jury is out if it's really going to add any yield at this point or not in their crop development.
Right.
Okay, now I do want to take a look at the wheat.
Okay.
Now, on the wheat market overnight, let's go ahead and take a look here at our Chicago wheat first, where we have the May contract now down 2 3/4 at 4.86 right now. You have July new crop wheat still showing a trade that's 3/4 higher at 5.06 1/4. If we flip over to the Kansas City market here, we have the May contract showing a trade of 5.16 1/4. That would be down 4 1/4 cents. The July still showing a trade 3/4 higher at 5.38. If you look at the Minneapolis wheat here, on Minneapolis, we are now showing a trade on the May unchanged at 6.17 1/2. And we have July up 1/4 cent at 6.25 3/4 according to this update here. The wheat trade under a little pressure here. I have not seen a change in the forecast here, Chris.
I haven't either
at all.
And I think traders probably just don't want to get too ahead of themselves, because over the next 2 to 3 weeks, any kind of moisture could still be of benefit to the crop. But as we start to see the good crop, whatever is left out there growing, it makes the bad crop look even worse. And so I think that's what they're doing, is waiting to see what kind of deviation that they have between the two.
A lot of pressure from the ending stocks report last week, I guess.
Yes, it's still burdensome, especially world stocks.
Yeah, caught a few folks off guard. I do want to take a look here at what's going on in the cotton market right now, too. Let's take a look here at the cotton. And we have the May down 98 points at 83.54, July down 75, but the December is down 21 points at 78.51. Kind of a tough go there this morning in the early going. All right, we'll be back in just a moment, and we'll take a look at our livestock trade. Might take a peek at that dairy market, too, when we come back. Thanks for joining us. I'm Marlin Bohling. I'm joined with Chris Swift here this morning. Chris is with Swift Trading Incorporated in Nashville. Thanks for joining us. We're going to take a look at how we're opening up here in the cattle market this morning. We kind of ended on I guess you could call it a bit of a minor flourish. Friday afternoon, live cattle was a little bit higher.
Right.
A little over $1 higher, if I recall. But let's take a look at where we are now. So let's go to the big board here. On the live cattle trade, so far in Chicago, still a little weakness. April down 72 at 122.40. June down 72 at 113.58 per hundredweight. Now that's only one tick from our low of the day. And we have the August contract down 67 at 110.98. The weakness is the most severe on the nearby contracts. Chris, this morning I saw early calls that thought it would open a little higher. What happened?
Well, Friday we got a little burst, and that was pretty much only in the April contract. That was due to the basis being pretty wide. We'd finished up the cash trade. Futures were hanging down on the low end, and so to narrow up that basis, I think futures made it easy to just jump. But we have a lot of product to have to go through over the next 2 quarters. And with hog continuing to be persistent in their increasing of inventory, now we've got second quarter production slated several thousand tons higher for the beef market, and already we're starting to see advertisements trying to push that pork out of the door with buy one get one free specials at the grocery stores. So
it's going to be hard to compete
they're trying
with that, isn't it?
Yeah, it is. They're trying to get it out the door right now.
All right. Well, let's take a look at the feeders and see how we're opening up this morning. On the feeder board, we have the March down 44 at 142.08. April down 65 now at 142.50. The May down 67 at 143.98. So the weakness all across the board there. Now here, the most weakness is in the deferred contracts by a little bit. Is that a surprise or not?
No, not really. They held some premium to them, and I think they're just kind of evaporating a little bit of that premium from the down trade that we've had.
Okay. Let's take a look at this lean hog trade here this morning and get an idea of what things are working on here this morning, where we have the nearby contracts. April and May here, Chris, are both over $1 lower this morning. You have your April contract at 66.67. That's down $1.18 right now. The May at 70.95 would be down $1.05. That is on the low of the day. Where do we see the most volume right now? Is it in the May contract, or where are they trading?
April and June will be the 2 ones. May is a very interesting contract month. It rarely holds a great deal of open interest into it. It was a contract month that was brought on about 10, 11 years ago that was different than the others that had been around since inception of the market. So, but April, June is where the majority of the volume is.
And they have been doing some rolling recently, right?
They have been. June carries about a $15 premium to the index right now, to the lean hog index, and so there's still quite a bit of basis there to try to move around.
Let's take a look at the milk prices if we could, and take a look at this class 3 milk category. The nearby March is up 4 cents this morning. Chris, where do we trade most in this? Is this now in the April contract?
April, May will be 2 of the biggest.
So April is down a nickel now at 13.98. Don't know if you can read much into that. It's kind of mixed and all over the place.
It is. There's not a great deal going on, but in the milk industry, there's some things going on with Walmart now having a new processing plant that will be open in about another 2 or 3 months that will take a lot of what of Dean Foods suppliers, our suppliers here, would go to Dean Foods, and now they'll either won't have Dean Foods to go to, or they will be shipping to the processing plant there for Walmart.
That's interesting. Yeah. Now, where is that located, do you know?
It's either Indianapolis or Indiana, one of the two. I can't remember which one it was in, but it was, I think it was Indianapolis or Indiana, one of the two.
So in that area, anyway.
Yeah,
so,
in that area, yeah.
Could be maybe a shift in the regionalized market.
It will, yeah. It'll definitely make for a big difference, especially here in the state of Tennessee. As we continue to lose milk production, it's going to be harder and harder for them to be able to find an outlet for their milk.
Well, Chris, thanks for coming in. Appreciate
Absolutely.
It. Always good to visit with you. I appreciate that.
Truly.
Chris Swift happens to be with Swift Trading Incorporated, and he is based, of course, right here in Nashville. So, Christina, with that, we'll hand the reins back over to you.
And he's right. It's Fort Wayne, Indiana. So
Fort Wayne, Indiana.
You got a good
Okay,
memory there, Mr. Swift. All right. Thank you so much.